We happy? Vincent! We happy?
Yeah, we happy. I love gold so much that I even lost my genitalia in an unfortunate smelting accident.
Welcome back, traders. Appreciate your time. Appreciate you for stopping by. My name's Tony. I'm a bit of a professional nerd that's turned trader, and I've decided to make a little series on the basics of the basics, what I feel and believe is necessary for you just to enter the market, not to become a hugely profitable trader. I'm not going to teach you how to trade. I'm not even here to tell you what to do when you trade. What I am here to do is to possibly provide you with a framework to work with that will help you decipher the markets and come up with the best strategy that you're possibly capable of doing. So the first one, we went through how to identify basic reading of a chart, absolute bog standard stuff in terms of levels, key levels, how to mark them out, and preferably staying on higher time frames when you're new to the sport. But today we're going to talk about another thing that got me at least, and I see it happening to a lot of people, especially with the individual that I was personally training, and this is with regards to intuition versus a system. You're going to see a lot of people online predicting what the markets are doing, and then when you see them trade live, it's almost haphazard, right? You'll take up a certain position here because X, Y, and Z happened, but then you wouldn't do it here because you kind of got this gut feeling that something happened. And what are gut feelings? Gut feelings are emotions. And initially, you can't trust them unless you can identify them correctly. Now, if you're depressed, you're generally going to be making terrible decisions, and you shouldn't be, especially making decisions that are going to affect long-term plans that you have or goals that you have. So you first need to realize that gut feelings are misleading. And if you're not like I was, but if you're lucky enough to be a winner early on, you can get overconfidence from gut feelings which cannot be repeated, and you can't track them over time. You know, some days I wake up, especially on like a Monday, and I'm starting to think whether I should be trading on a Monday. I wouldn't say I'm emotional, but I'm certainly taking trades that I look back on and I'm like, what was I doing there? Like, it's kind of what I was looking for, but it's not 100% what I was looking for. And that's because maybe on that day I wasn't feeling too good, or maybe Mondays is just my low point of the week. I don't know, right? That's something for me to break down and break through. But the reason that I could do that is because I took a more systems-based approach to things, and I was tracking everything that I could, right? And the first thing that I noticed is that I was taking haphazard trades, right? I didn't have a system that I was following or rules that I was following. So with a system, I found that a bad day has just become a down day. Whereas before, when I didn't have a system and I was like price action trading, a lot of the Roger Banks stuff, a lot of the DVS stuff, and again, I'm not speaking bad for anyone. Every system can work for those individuals. It obviously works for them, and that's great. But for me in particular, I had no way of tracking exactly what I was doing wrong, and so when I was having a bad day, or when I had a bad day, I could wreck my account, right? I could do 30, 40, 50% swings on an account, which is, it's not sustainable, and it's not the way that you want to be trading, right? So what you need to do is to understand that having a lack of system in the beginning will lead you into a rut of never knowing what's wrong. Experience is key, and there's nothing you can do other than time. You can't short track long-term experience in the market. You can't short track something like what Messi has when it comes to football or soccer, if you're from that part of the world. When he walks onto a football field, he's not looking at the same game you're looking at. He's looking at a completely separate game, right? People are running around in the background. He's checking out what substitutions are coming on, what players are marking where, how's the keeper doing, what are my defenders playing like. There's a whole nother dynamic, or game rather, that he's playing that you'll never understand unless you've spent the type of time that he has to really hone his skills in that particular skill set, right? So the first thing is to understand that it's going to take time. pattern recognition is something that you're developing as you're spending time on the charts. Now, humans are very good at noticing patterns in general, and when it comes to the marketplace, you can use that to your advantage. You need to learn your craft in depth. You need to learn absolutely everything that there is to know about technical analysis, about the basics of the marketplace and how, you know, price moves and why it moves and who moves it and things like that. You need to learn all of the stuff, and then you never stop. There's nothing that I or anyone else can give you that's going to give you confidence in your future as a trader. It's a lifelong learning pursuit, right? Look at the best poker players. I love poker, so look at the best poker players in the world. They usually have multiple coaches. They have psychology coaches, they have performance coaches, they have sleep coaches, they have everything that you could possibly want as a coach, right? The same goes for professional traders. They're always trying to push the button when it comes to performance, right? Eke every individual molecule of performance out of what I can do, and I can only do that through the help of other people. And in this context, that equates to learning, right? It's just lifelong learning. So now that we got the beginning part of that out the way, what do you do? Like I told you many times before, I'm not here to teach you trading, so I don't know what you're gonna do, but what I can confidently talk about is what I did to get through this initial portion of the trading game where I didn't have a system and I wasn't thinking in a probabilities kind of mindset, right? And so you need precise measurements. So the first thing that I needed to do was to look at the marketplace and to say to myself, where are almost like static values? Where are repeatable measurements in the charts that I can use to determine things that will be an entry or an exit for me, right? And that came to indicators. Now, a lot of people are going to hate on indicators. You know, everything that's known about price is already on the charts, dude. That's 100% true, but it's also not displaying the data that's on the charts in a way that makes sense. So a good example is with spreadsheets, right? I can get data from someone in what I do on you know, my part-time. I can get data from somebody about a computer system or something like that, and it'll just be random numbers in a spreadsheet. However, I take that same data and I stick it on a line chart, and boom, I've got a whole new understanding as to how my system is performing over time. And that's the same thing when it comes to indicators. You're just displaying the data in a way, or representing rather the data in a way that is standardized because it's mathematics, right? You're going to take the high, the low, the previous, the opening, the close, all that sort of stuff, and then just put it against some sort of set mathematical equation. And that's going to give you a standardized measurements to it. So for me personally, I had to go and look at indicators to try and get some kind of line in the sand as to where I was willing to enter trades and exit trades. Having almost like 4-hour support and resistance, that's cool, but it's also something that's up to interpretation, right? Levels are up to interpretation, and they don't always hold true. So something that's been super solid for, you know, years might not be solid anymore. That same buyer might not be in the marketplace anymore. He might have died, who knows, right? There's a lot of things that could have happened. So I looked at the indicators that I could logically put in my head. Like I kind of saw why they were there. I could see the reasoning behind them, and they made sense to me. Okay, so things like the VWAP. VWAP I don't trade with particularly. In fact, I don't use it as a measurement, but volume weighted average price, if you look at that calculation, you'll see that it's a logical way to decipher what would be an average price when you take volume into account, right? That's absolutely fantastic. Volume in general, that's an indicator. You know, nobody really is talking about it. And you'll get a lot of people saying you don't need to know volume because of candlestick sizes. absolute bollocks. A candlestick size can be 100 pips because there was nobody else in the counter trade at that one time, but there could have been just one, seller with a small order or buyer with a big order. Who knows, right? Candle sizes, it does not equate to total volume. It can show you how much action there was during that particular time, but when it comes down to actual volume, a doji candle could have had the most volume in an entire day, but it was just like opposing forces against each other, but the volume was just massive. So volume is what I use. Stochastics is something that a friend of mine uses, a professional trader actually, and this is what he bases his entire strategy on. It's just a simple stochastic crossover, and when you look at it again, it's just a mathematical equation that you can use as an indicator. For me, pivot points were absolutely crucial. And that was the building blocks for me, the thing that I looked at and I was like, what, pivot points work. I can see how I can put together something here. So the original concept came from like the 70s or the 80s or something like that, where guys were sitting in the pits and they didn't have charts and all this like awesome stuff that we had today, and they just needed to understand certain price levels. So they took like the yesterday's close, yesterday's open, today's whatever, right? They took a couple of those and they were able to then have points on the points within the day where they were willing to be buyers or sellers, and I find pivots to be particularly interesting, and so I use them in my trading. So once we've got our indicators down, we've got our standardized measurements for the charts. We're understanding that we can't trust intuition initially. It will become a major factor in our trading later on, but initially it won't. We now need to start creating some imperfect rules and guidelines. Trading and life in general is all about rules, right? Discipline equals freedom. It's 100% a truism, as it is today, as it will be in a million years from now. If you have the discipline or the rules that you follow, most importantly, then you can build a system of trading that can make you profitable and can take the 50% coin flick and work it into your favor. Create rules that provide direction. Have flexible guidelines. Failing with rules provides excellent feedback to refine your rules, right? So when you're failing within a rules framework, that's a great opportunity for you to learn. Collect data on a minimum sample set. So when you have your rules and when you have the indicators that you're testing out, go and test them over a minimum sample set of data. Now that's going to be debatable. Some people are going to say 30 trades, some people are going to say 50, some people are going to say 100. I'm just going to say put it over a large enough sample set that you're happy with, and don't do it over like a single week or a single month in the market, right? Go and pick some random days back and go test it, trade it, live trade it, forward testing, all that sort of stuff. Do as much as you can to get confidence in it, or more importantly, to figure out where it's falling over, and because you're going to need to refine this. So once you're done with that, you're now going to have enough data to logically make some decisions about what you're going to be using and what's working for you. You're going to be learning from the flaws, so you're going to use your imperfect guidelines as learning opportunities, and something that's not working might just be telling you that it's a slight variable within that needs to be changed. And don't throw out the baby with the bathwater. That's a British saying that I love. It's like you don't need to chuck an entire system out because one thing didn't work. Maybe you just need to use the 50, I don't know, right? Again, you're not looking for something that's gonna be a perfect system. Nothing's gonna ever be perfect, and you're always gonna have to refine things, but you need to use the minimum amount to get the maximum amount back, right? So put in the minimum in terms of indicators and everything else. Track it as much as possible. Try and remove where you can, and then refine what's left to something that gives you confidence because you've tested it fully. That's going to put you in a far better place to be a trader and a profitable long-term trader than if you don't do that. it all boils down to, again, discipline equals freedom, the power of consistency. You need to hold yourself accountable. You need to say to yourself that, you know what, there is no point that I'm ever going to call myself a trader unless I'm tracking every single trade that I do in a journal. There's no point in me attempting to take something seriously when I myself am giving it less than 110%. So hold yourself accountable, look at yourself in the mirror, have those tough decisions, those real introspective, have a coffee and a cry kind of decisions, or discussions rather, and then make some decisions, but stick to it and hold yourself accountable. Tracking is gonna make things so much easier. I've repeated that so much on this video. Track everything that you do. We don't live up to our highest potentials, but rather fall short to the lowest tolerable versions of ourselves. I love that saying so much. It's like, if you set the bar to a point where you say that no matter what, I'm never not journaling a trade, the high and the low points in your situation naturally moves up to the low point, which is I will not do any trade without journaling it. Once you've got that, you can now move on and say, you know what, I won't execute any trade unless I have these 1, 2, 3, 4 factors all fall perfectly aligned, and I'm going to hold myself accountable to that. So once you get to that point, your lowest level has now moved up to a point where you're tracking all of your trades and you're only executing based on your rules. Now your high point also moves up, right? It's like this beautiful swinging ebb and flow movement. Cool, so let's get some action steps together. I've left a link for a stripped down version of a journal that I use and that I've created in Notion, which comes subsequently from another person called Tom Trades. You should go check out his channel on YouTube. Fantastic trader, really profitable. And what I'll do is quickly show you guys how I would enter in different setup names, your bank balance, whatever the case might be. And this should hopefully just get you from, you know, a point where, I don't know if you've got an Excel sheet or whatever the case might be, but to a point where you're actually able to then nail in on the variables, right? If I take this particular variable out, what is my win rate? At what times am I winning the best? What sessions should I be trading? All of these sorts of things are really, really important. So let's go through that. So let's get into how you would use the journal that I've provided in the link down below. This is going to be a largely stripped down version of all of the automation and logic that I've spent a lot of time creating for my own personal life, and this is to ensure that I am fully aware of what changes that I make during my strategy or new confluences that I'll bring into my strategy, what the downstream effects on or what the real life effects are of those. If you would like the full version of my journal, that will be released quite soon. I'll make a YouTube video on it, but that would be something that I would then charge for, just due to the pure length of time that it's taken me to create that. And big shout out once again to Tom Trades. I'm going to leave all of his details down below. I hope I'm not standing too much on your toes here, Tom, if you are listening. However, this is a stripped down version of it, and I still believe that whatever you're doing in your own personal world is not affected by this. If it is, however, please do reach out to me, and massive apologies. Let's get into it. So the first thing that you would want to do is to go look at your accounts, trading accounts. To add a new one is pretty simple. So you would just do my maybe add a little something, a little bust there, a little red bust there, you know. Maybe a background. Looks good, looks sexy. So you've got my trading account. What type of account is this? It is a live account. What is your initial balance on this? Let's just say 1,000. The goal that we would like to reach on this account is 2,000, and that's pretty much it. Now that we've got our sexy account down, what we want to do is to actually go and do the work. So we've got a particular strategy, let's just say. I've left a couple of confluences and strategies in there. However, you will update this with whatever it is that works for you or whatever it is that you're testing. And so let's go through that. First things first, up here, top right, click on. I've left all the pairs that I would normally trade over here. Yours are going to be different. I don't do Forex or FX pairs anymore, or currency pairs anymore. So I've just left it as a blank catch-all category. You're welcome to change that, obviously, however you want. But let's just say that in my case, I've taken a trade on the NASDAQ. A dirty NAS. I would look at the 2 trading accounts that I currently have, and let's just go do my new trading account with that shiny red bus. The open date. Now there's 2 open dates. The first one is one that you would input. So right now, or right meow rather, the time is 8:36. And then you'll notice as well there's an auto-created date. So sometimes I just want to open the trade or open the journal entry rather at the time of my trade, but I don't necessarily have time to fill in all of the details. At least then I can get some sort of idea and line that up with my broker's account so I can know which trades are what. The strategy that I'm using, so I've left 3 for you over here: hunch, fuck up, and support and resistance. Generally, in the beginning, you probably fall into those 3 trades. But let's just say you're not, and you've got a new strategy where you call the fib retrace, whatever you want to call it, right? You just go and create that fib retrace. The direction of your trade, pretty obvious. We'll go along here. The time frame alignment. So what do you trade on? You can go and add any variables that you would like in there. Me personally, I trade on 1 time frame. What determined my entry most importantly? Market execution, buy or sell stop limits. You can add whatever you want into this. So maybe there would be a candle flip or something like that. Right, I'm not too sure what it is that you would like to track, but if you'd like to, stick it in there, make it as descriptive as possible so you can understand that. Confluences. So what added to your confidence in this trade? For me, and especially for this one, let's just say hunch. But in general, if I'm trading something on the fundamentals, there's going to be a lot more to unpack about why I took that trade. And so what I'd then copy is maybe the economic calendar for the day, maybe the results of that, you know, NFP came through super hot or whatever. I just put a screenshot of that NFP data. Who knows if I use it in future? I'm not too sure, but I'll just keep it just in case. So in this case, let's just go and say we had a hunch. Terrible way to do it. However, our execution was flawless. We would put that there. For me, this is so crucial. So this one checkbox here I've left in. I've removed a lot of other checkboxes that I personally use, but the perfect execution you should be striving for on every single trade. What was the entry price? I have no idea what NAS is currently trading at, but it's probably massive. So let's just say it's at 5,000, and I know it's probably completely wrong, but whatever. The pip value for that, so this changes broker to broker. It depends if you're trading US or GBP or whatever the case might be, but let's just say that I got a 1 pip value, so 1 standard lot. The stop loss size, for me this is quite important, so I'll just put a stop loss at 4900. It's quite a stop loss. And then you would scroll down to the bottom of the page. Now generally it'll just look like this. I had the properties open for some reason, unfortunately, but let's just say we've gotten up to that point, and now we're opening up trading view. We've taken a copy of the chart, whether that be officially or through a screenshot mechanism on your computer, and then you just simply paste it in there. Sorry, I was dealing with something else, but let's look for a picture. Let's just say we pasted it in here. So this would be a picture of my trade. This is actually this week's highlights that I was looking at, but let's just say this was a picture of the trade. Now your trade is finished. Let's just say that we've closed out the trade. So we include the time and we say at exactly 9 in the future, I closed out this trade. My exit price for this trade was 5,050. And you'll have to manually enter in your pip result. However, in my full trading journal, OBS, this is automated. But in this case, I think we got a cheeky 50 or pips. I'm not too sure. I can't remember on the NAS, but whatever. Let's just say it as a 50. And then the status, what do you feel like this, or sorry, not do you feel like, what officially did happen? Did you close the take profit? Did you close the stop loss manually? Blah, 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 blah. So let's just say we trailed the stop loss for profit because we didn't want to let this thing run back and take us out. I would then come in and fill in the exit image, and then I don't generally do this. I used to do this a lot and then go back over the weekend. So like on a Saturday morning, I'd wake up, have a good coffee, and then go through my trade journal. Here I'd likely look at some of the reasons that I did for it. This is a Saturday morning / Sunday morning go through. So what was the checklist? How are you feeling after the trade? Any mistakes? Anything you learned? Actionable items? And then review your results. So I've left only a few things in here. Please expand on this. Please make this personal. Please do exactly what it is that makes you comfortable with the data and the trades that you're taking, so that you can capture everything about that trade, but overall success probability, and then review and adjust generally some things. So now that we've got 4 trades in here, let's just go and attach a time to that just to make this more logical. So now we've got 4 trades in there. So let's round this whole story off. We've looked at how to add new trades. We've looked at how to add a new account. There's 2 account types, both live and backtest. That should make sense to you without me having to explain it. And every single trade that you associate to a trading account will pop up in this Your Trade Accounts tab, and it'll automatically do the calculations necessary in terms of the goal progress with your goal amount, and then taking that initial balance into consideration. So apart from my own trading journal, which I have used for a long time, I'm now using a like an automated journal where you can just put in your MT5 details for whatever broker that you do use. I think they have C-Trader integration as well, and what it does is it just pulls out everything that I was really working hard to define, and it lets you see exactly which parts of your system are working and which parts are not. Mine's going to be particularly interesting because you can see where I changed variables in my strategy, and when I put them back, what happened. So let's have a look at that now. Cool. So here it is. Not the biggest bank balance in the world, but anyway, let's get that aside. Let's look at this systematically, right? So I put in a balance over here. You can see it over there. And my system was kind of chugging along. I've got some live videos on my channel there where you can see the system that I'm working through and trying to work with. Adjusted some variables and then added in more indicators than I needed to. Completely not necessary for what I was trading, right? And you can see how it instantly went down. So the feedback was quite dramatic. It was quite dramatic, but removed them because I could identify them. Most importantly, right, I could identify them and subsequently came back up. Now, this is good because it gives me everything that I need to know about my trading, which sessions, how many trades I've taken during those sessions, the win rates of them. I don't trade Asia. Don't know why that says Asia. Oh, it's because it's 6 a.m. London time, yeah. All of the other stats that you might need over here. Gives you your back testing ability, which is pretty cool. This is me testing out my system that I use. A nice little integrated calendar, which is pretty cool. A trade log, so you can go and sync that up, none of which is impossible to replicate, and you don't necessarily need to buy a service like this, but this is a paid for service. The link, that obviously my link for this is in my description for this particular thing, and if you do want to have automated journaling, this is a fantastic product. I've been through a few of them, and I find this one to be the best. So you've got a couple of extra little tools, but you know what, you get these tools everywhere else, so whatever. It's got trading view integration. That's pretty cool. So putting together these 2 pieces of the puzzle, journaling on the one hand, having a deep understanding of what days, you know, what statistics, all that sort of stuff, that is absolutely crucial, coupled with being able to understand which portions of your trading from a systems perspective are you removing or adding, and then tying the 2 together becomes quite easy, right? It's like a little detective show. And that's what I love about trading. It's a numbers game. I can never understand the outcome of every individual trade, but over a large enough sample set, I can predict a certain win rate. Only based on historical facts, but still, I have to base it on something, right? All systems in the world are based on something. I'm not going to try and fit it too well to the past because I have to have flexibility in the future, and you could only do this through journaling. So now you've seen my journal, you've seen how I've automated stuff, you've got my views on everything from intuition, why you shouldn't be initially trusted, to everything in between, where you should start, what tools you should be using. And I will drop another video at some point as well, and probably the next one on what gurus I found, what brokers I've used, what socials I've been a part of in terms of podcasts and listening to and material and stuff like that. And then what Discord servers, the magical world of Discord. I hope it wasn't too boring for you, but have a great day. Look after yourself. Peace out.
I love gold so much that I even lost my genitalia in an unfortunate smelting accident. 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 Smelting accident.
Excuse me.